Hello, everybody, and welcome to the Plus3 Forecasting Futures Stock and Commodities Show. My name is Ben Maldonado. I'm here with Barry Hederachi. Hey, Barry.
Hello, Ben. How's it going?
Good. We're recording on a Saturday afternoon, and the reason being is there is a lot going on, and we've got a lot to cover today. So let's get right into it. The chart we have up here is our old friend Bitcoin. Had an interesting week and continued hurting a lot of people as fourth waves do. Not a lot of progress on the chart, but definitely a lot of pain. What do you think, Barry?
Yeah, I think a lot of pain. Well, if not now, there's gonna be. So
Yeah.
yeah, it's still the same churning pattern. So let it work itself out. And
Yeah. I mean, the only thing we did this past week was look like we were going to break down. Then we pulled right back, broke that little steep dotted trend line, and now we're right back, kissing the bottom of this wedge. Still dancing with that half square right here. So again, it's stay out and keep your capital intact is my take on that.
that's a good take.
Let me throw it over to you. Let's take a look at the big five and then come back and do the whirl through the commodities, because as I said, a lot is going on. So what do you got for us on the S&P this week?
I'm trying to remember where we left off last week. Let me get rid of the square here.
We were at the bottom of the wedge last week, right before it broke down and then reversed.
Right. So yeah, we were talking about the 270 degrees up. Yeah, we were right up here and we started to break down below the square, the 270 degree line. And we talked about the market getting weak and pointed out a couple of support levels. And those are the levels that are to your right. And I think I dropped this line last week, this 42.26 area being support, or right in this. And we basically came into that. Didn't think we'll do it in one day, but that's how it goes. And we rallied right back. So being that we came down into support, that was a place to look for some kind of a turn or a pause. And of course, instead of that, S&P did what it usually does, which is just to rocket out of there. And we're at new highs. So let's go back to the square so we see where we are. Well, long as we're above the 270, I would say we're in a strong position. And what we're looking for next is to see if there's a continuation. I want to see any pullbacks holding above the 270 degree level, which is right around 43.50. Mm-hmm. That said, there's a couple of other things. We also looked at this 45 from the May low coming up and that being resistance as well. And we are breaking above that also. So I would say market's definitely in a strong position, especially about 43.50. We might hang around up here, but I would like to see, the old high up here around 43.82, 43.80 area. If we can hold the upper level, 43.80 area, that would be very bullish on any pullback. And if we can hold 43.50, that we're still in a positive sense, positive footing. Okay, that said, I also have another resistance level around 44.40. So if we hold up here, so the next target up is not that far, but it's 44.40. And until it gets there, I'm at least on the bullish side, and that would be just fine. Now, if we break below 43.80, and 43.50 thereafter, then I would think this was a false break and we could have a high in place. So those are the brackets that we're looking at.
But and Barry, in our cycle work, we also have some timing this weekend.
We have some timing this weekend, so we always want to keep an eye on that potential for a false break, and use the and bracket the numbers to see which way you should be trading. So far, I would say it's bullish, but I think a 43.80 would be a good level to keep an eye on for strength. At least till we get to 44.40, figure 44.50. It's right in that range. But we are in on a strong footing above those levels that we talked about. Just so everybody's clear.
The other thing that I saw when I was doing my ES work was that the move from the low on Monday squared out at the high.
On the shorter time frame.
Shorter time frames, yep.
Right. That would make sense.
So we need to watch and just see how we come out of that on Sunday night, Monday.
So that's that quarter square that you caught there. Okay, that makes sense. Quick look at the weekly. So I think this is really the story in the bigger picture. We have 144 degrees up square on the weekly basis, and 72 weeks out coming up in short order, say a couple of weeks. And we're above 7/8. So, in a classical sense, the distance between 7/8 and a full square is fair game for a cycle to finish up. And we're pretty close to the 72 weeks, and we're close on both sides, price-wise and time-wise. So next week would be plus or minus one bar from being exact. Because of that, I think really have to watch the upside targets, and because we might be getting close to finishing this up, at least in this time window. If we manage to get through, fine, we'll trade the next leg up. But I think this is an area to be a little bit cautious. And the last time I said that on the weekly was when we were at the 50% line, and you can see we were, in there for over a month screwing around. So we could get the same kind of effect here. So just to know that there's a target, we're reaching up on a target, we're very close to it. 44, 40, 50, that area would definitely meet that target requirements in price. And we do have time cycles in here, one of the key ones being the 72 weeks up.
And it's interesting that you have that 72 that's coming in the next couple of weeks, because in my scan of the commodities this weekend, it looks like over the next couple of weeks, there's going to be some major activity going on there, which we'll cover when you throw it back to me, but similar timing.
We also have 648 weeks from the 09 low.
Man, look at the good hits off of that.
Exactly, because the low
360, 576, 648. Man, that's a good vibration.
Well, the 360 and the 576 is very key. Low to low, and so we have a high coming in. It lines up, and I think those are the times you really want to be cautious and watch it. All right, so that's done. You want to add anything to the S&P here on the daily basis?
No, it looks good.
All right. Let's go on to the bonds. Not much to say. We were talking about last week with upside target around 166, which is the upper dotted line we have here. And we were expecting bonds to at least test that, which it did. And from there, it sold off. Again, my take on bonds for now is that long as we're above the trend line here, that it's in a firm position, especially as long as we're above the half square, and above the trend line, it's even in a firmer, let's just say, position. But we also hit some major resistance up here when we reached up to the new high. So my take for the next week is that we're probably just going to consolidate at best. Now, if we break the trend line, there's a good chance we're going to test the 50% line, which is around 62. And if we take that out, then back to the weekly support line around 59. Just want to go into the weekly really quick. So on a weekly basis, last week we looked at, we talked about how we're above the 52 square off the high, and that the next resistant level is at that quarter square. And that's exactly where price went and reversed, right? So now but the weekly trend line is in place. Everything looks fairly firm. But since we're doing a weekly show, week to week, next week I'm expecting to consolidate, but a little bit more on the weaker footing than we've been in the past. Do you want to have, are you covering bonds today?
No, because I think you nailed it. What I saw was, basically the same thing, looking at kind of a chop this week. Daily support at 63.16. It's holding. As long as that does, it's bullish, but I think chop is the call.
Yeah, just wait for it to consolidate and finish up.
Mm-hmm.
Next one up is one of our favorites, Crude. Last week, I think we left off, well, we've been looking at targets around 79. Well, as far as I can remember.
Mm-hmm.
Well, in July, early July, we almost got up to it. And last week, I think we left off talking about, any kind of a pullback, finding support in this area. And then we dropped these blue lines, support resistance line. We're expecting it to work between those. So, last week's low came in pretty close to the 66 number up here.
Mm-hmm.
And came right into the top of the range that we consolidated in the spring. And now it looks bullish. I think it's okay. But I don't see a strong bullish move yet. But I do see 79 being tested. I think this 144 area has to be tested on this run up. So I think 79 is still in the cards, especially since we held the channel well, we held support well, everything looks okay. So bullish on that. We're looking at 79 as a next target up, which is 144 off last year's low.
Yeah, the notes I have on Crude, I'm not going to cover it because I think you nailed it. There's daily, monthly, and weekly resistance all in the 75 to 75 and a quarter area.
Mm-hmm.
And until we get above that, it's probably going to be, back and forth, choppy with a bullish bias. But that's we got to clear that to really get going.
Right. So here's the weekly. Let's look at the square 72 again. We came really close to it, to our number, and that's where we got the number. 79 off this last year's low. And yeah, we pulled back, but it looks like a normal pullback like all the other ones. And it would be perfect if we can go up in square in here in September at 79 or anywhere along that line.
Mm-hmm.
But we'll see. So far, it's a very nice bullish market. This is what they should look like, very clean. Yeah, that's not much to say when they're just trending.
Yep, just trade it.
Just trade it. All right, next one is gold. Again, not much to say. I think we left it off last week. I think, didn't we say it's just sort of slushing and consolidating, right?
Mm-hmm.
And we dropped a couple of support resistance lines, and we were still between those, 1789 being support. And for the bullish flavor to come back, we were looking for 1830 to be taken out to the upside, or bearish being 1789 being taken out to the downside.
Mm-hmm.
Well, not only did it hold that, it also held the fork fairly well. So I think it's on a bullish footing, it's positive footing, but not a lot of juice yet. It's still sort of consolidating in the same band.
Yeah, this is one of those ones, one of the commodities I'm going to talk about that I think is getting ready to go.
Yeah, well, the pullbacks are holding really well. So
yep, it's not quite there yet, but over the next week or two, which coincides with, your S&P timing and other cycles we have. And it's not just gold. All the commodities that I look at are building to something. I don't know what the hell is going to happen, but something's going to end these almost year-long corrections we've seen.
Right.
Anyway, we'll cover that. But yeah, I think I agree with the same sentiment on gold. It doesn't look bad, but not quite ready.
Exactly. It's consolidating, and it's clear we dropped these little trend lines last week to point out the consolidation pattern, and it could compress for longer. But for now, it's holding. We got an inside. Looks like no, it's not an inside bar. But anyway, not much action. There are better markets to focus on. All right, got the levels, covered that. Take a look at the dollar. Dollar is, pretty much the same story from last week. We've been bullish, and there is a trend line here that we've been following. So last week, the pullback held at the trend line. We also have a support level at 92.59, call it 92.50. And managed to hold above. So I think the dollar is strong, still strong, and expecting it to at least test the half a square, which is around 94. All right, so 92.50 support, 94 being the target for this run up. If we get below 92.50, then we have to reassess the situation. It's definitely not on the bull trend. We're going to consolidate or something else is happening. So when we get into the dollar weekly, take a quick look. It's the first time we're looking at this chart because just didn't have it in this group. Again, we came off the highs last year, found good support at the 108 degrees down.
That half square. And normally like up here on the way down, went back and tested it and it failed. So I think the next logical test is again the same area, which is right around 94. So that 94 area keeps coming up as some kind of a target to the upside. Interesting. You have the same weekly timing there, don't you?
Yeah.
Couple weeks.
Yep. And
something's brewing, my friends. We don't know what it is, but something's brewing.
The market says something's always brewing.
Right.
So here we're looking at the Euro USD. We've been, for weeks and weeks, we've been talking about Euro being weak and that there's a good possibility of the old lows from April being tested. And we're doing that pattern. And, this pattern is a little bit suspect in that it could suddenly just wash out. So it's possible that we, spike down and test this or spike down and make a false break. So I would keep an eye on it. It is slippery. I think till this upper trend line gets taken out, this is really on slippery ground. Being the euro dollar. Take a look at the weekly. Again, been looking at this for a few weeks. And not much, it's a simple chart. Just that there's some key support around 17, 16, let's just say. Or the old low, it would be easier reference. Looking at 1700, let's say 1700 support. So it looks like we're going to go and test that, or maybe even take it out by a little bit. And if we do that, keep an eye out for a false break. Else, we have a half a square just waiting here around 1515. All right, so it looks weak, and especially if we break this, keep an eye out. But that's a target we're looking for it to reach. And yeah, that's all I got. I think that covered it. This is another ES chart. Normally, I start out with a calendar day chart, and I thought maybe next week I'll switch to a trading day chart because then it's in line with all the rest of them. So I'll bring that up next week. But so far, I think we're okay.
Excellent.
All right, let me throw it back to you.
Good review.
Okay, thanks. All right, there you go. What, Bitcoin again?
That's Bitcoin, but let's look at NQs.
All
The
right.
reason I want to look at NQs is this is where the strength in the market has been. And we early in the week on Monday, we broke through this trend line. And then the rest of the week, we powered right up through it and got back through and on top of that trend line. What the interesting thing to me here is we're butting our heads up against this resistance in this, 150 range. Do I think it's going to stop it cold there? Probably not, but it's certainly an area that we need to pay attention over the next couple of weeks, given the timing that we have coming up. And also with this, with any of the squares, and especially with these stock indices and commodities, they have a tendency to, when at major turns, push it a little bit further and go up, like we say, 1/8 higher than the actual square. So could we get to the 15,300 level, 15,300 in NQs? Certainly possible, but this is an important milestone. Going that full square. Generally, you run into resistance, and with the timing coming up in early August, you can see on the full square here, we really got to keep our eyes open as to what potential is going on there. Anything else you got on NQs, Barry?
No, I share that sentiment. I think you covered it. I think, well, one of the key things is we're about to do a sort of a educational video on how we use these levels and squares. And until we do that, just to point out, the key levels we watch are these full squares and half squares, and we're at a full square. So I think it's time to pay attention to that.
Mm-hmm.
So you're drawing it out.
Absolutely. Now we're going to take a quick spin through the world of commodities. And as I was talking to Barry before we started recording, I said, man, in the review this weekend, almost all the commodities that we look at, which is roughly 16 different markets, they all look like they're poised to break out of these consolidations or corrections or whatever patterns they've been into. They all look like over the next couple of weeks, they're set to move. And I haven't seen that in a long time. The fact that it coincides with some major cycle work that we have also, sort of puts us on high alert. But let's do a quick run through and see. In the grains, here we have soybeans. Last week we talked about beans. We were up here and we said, hey, let's see what happens on the next pullback. The next pullback is going to tell us everything. If we can make a higher low, it'll mean that we're in a position to have a big move out of here. Well, we sure got weakness, and look where the lows came in, right on the full square. So the grains, this is soybeans itself. We could look at hold on, let me get the other one up. Here you've got wheat. Same thing, pulling back. Wheat's above the square. As long as we're holding that square, it's in a bullish position. Let's look at corn also. And here's corn. All of them pulled back. We're watching these like a hawk because this is the entry that we want. If we can make a higher low and reverse on any one of these grains, we're in a strong position to run because it'll give us a higher low off of support in most cases with these things. Looking at pretty good structural composition because it's an area of a previous high where we're making a low. So the grains look good. We're watching these pullbacks, looking for good entry points. I know you were looking at the grains with me this week too, Barry. What did you see?
I agree. I think it's brewing and it's getting ready for a move. Just waiting for a little bit little bit more evidence, I guess, would be my position.
Mhm.
And maybe midweek or Monday, you can post the half squares or whatever the targets are. Not the targets, but like the half square and coin here and the key levels
Sure.
on Twitter, so people will have that. But yeah, I'm just waiting for a little bit of clarity. But it
Yeah.
is getting ready. You know, that's what we're calling it out. That's all.
Yeah, and this is what we've tried to do is make the show sort of giving you a heads up for actionable markets, and you can't wait until you actually see it happening. You have to prepare yourself because you have to know what we have. Two sets up, we have one set of eyes that we have to watch all these markets with, and you need to know what markets you need to pay close attention to. And I believe the markets that we highlight each week, you got to pay attention to them because they're in a position where the probabilities and possibilities are that they're setting up for big moves. Here's gold. We talked about, Barry talked a little bit about gold, and I wanted to emphasize that this is, again, one of these markets where, while it may not be ready on Monday morning or Sunday night, you got to pay attention, because what we've had is a roughly year-long pullback, and now we're seeing a series of higher lows and higher highs on this last move up. We made another higher low here. Now we're trying to see if we can, reverse, get above this resistance. And I think Barry nailed the levels to watch in gold. Daily, it's 1810. Weekly, it's 1830. If we get above 1810, we got to really watch 1830 closely, because if we break out above 1830, I think we're up and out, and this thing will really be moving. So I concur with Barry's comments on gold, and just wanted to show the structure that we're looking for, where we've got these not only higher lows, but you can see the acceleration because they start moving. The trend lines start getting steeper, and that's a sure sign of momentum coming into a market.
Hey, Ben, what's that 90-degree level price wise?
Right here,
Yeah.
it's 1812.
Got it. Okay.
So that 1810 area that you were talking about,
Okay.
that's critical. Here's another market where it's related to gold. It's the silver market. But you can see for a year we've been going sideways, building this nice base. And now we're starting to make these higher lows. We've pulled back sharply again, right onto the half square. And this level is, right around the 25 level. As long as we're above that 25 and we make another higher low, the chances are one day you're going to wake up and silver will be, rocketing higher. This is an accumulation pattern that we're seeing in a lot of these different commodities. And it's one that, you got to be aware of what's going on, so to watch it and figure out, whatever entry method you use, how and when you can get in. I was talking with Barry also before we started recording. There's a pattern that we're seeing in all these commodities, and there's one commodity that's been leading them in terms of time and where it is in the cycle, and that's copper. And what I want to do is show you on the higher time frames as well as the daily what's going on in copper, because I think it's going to be a preview for what's going to happen in a lot of these other commodities. So here's copper. Copper's had a big move up on the daily, and you can see we found resistance right where we thought we would, which was on a full square. We pulled back sharply down to a full square, and now last week we were sort of bumping up against this full square here, and I was thinking, oh man, this thing may roll over, and if it does, okay, we got to look and see where it finds support. Well, at some point last week, as you can see, it looks like it was on Tuesday. We made a low, which is another higher low, and then rocketed out of there. So copper is on alert for potentially being ready to start the next big move up in it. And then I'll show you on the higher time frames what we're looking at. Here's your weekly. This was the COVID lows in March and April of last year. Shot straight up out of there, pulled back sharply, and now we found support. We tried to get below this half square. Looked like it was going to roll over and maybe come down to the full square, and now we're up above it. This is the main pattern I want you to look at. This is a monthly. Copper made its all-time high in late 2010, early 2011, pulled back sharply and was basing for essentially 4 or 5 years before breaking out. Broke out, found resistance at the square, made a new all-time high. Now it looks like we're trying to get above this full square. If we can sit on this square, which it's right where we closed on Friday, the price closed right on this full square. If we can sit on top of this square, the next leg up in copper starting. And I believe it could be leading the next set of commodities, the whole group of commodities to going forward, because they all have this pattern. And I'll show you in some of these other charts, the monthly pattern and how it's similar to copper, just in a different phase. Here's natural gas. This is one we've been talking about for last 2-3 weeks on the show. Perfect acceleration pattern on the daily. We've congested on top of this half square. Perfect time to be accumulating a position. Then it takes off of the square, gets through the full square, sits on top of it, and we're up and out and moving in natural gas. Now, why am I showing you natural gas? It's already had its move, right? Well, let's look at it from a bigger time frame. There's your weekly. Again, sitting on top of the square, very bullish pattern. We should at least get to the half square here, which is in the 470 range, if not the full square, which is 570, 567 area. But look at the monthly. Does that pattern look familiar, Barry?
Sure does.
Looks like the copper pattern, doesn't it? Just a longer base and a bigger base, right? Exactly. This is an 11-year base. Mm-hmm. We just broke out of the downtrend line. This past month, we're getting above the half square here. It's just getting started. If copper, the working theory I have, that copper is leading the other commodities. If copper's leading the other commodities, we're in the second inning here, third inning maybe. There's a lot more to go in natural gas. Let's look at a couple other commodities that we've talked about before and where they are. Here's coffee. Last week we talked about coffee. We highlighted it right in here.
At least.
Yeah, because again, it had that pattern of higher lows, did its correction. You could start to see the accumulation coming. There's news about weather issues in Brazil. Boom. You get the massive move. Now, if you wait for the news to get out, you miss the move. You have to be in a position. Let's look at the bigger time frames and see where we are in the move. Again, pattern seems similar. Big base coming off a high, makes the move out. Look at where we stopped, right where we're supposed to. It's a similar pattern in a lot of these commodities. They're all in different phases and different stages. Here's sugar. Sugar's one we've been talking about for multiple weeks on this show. I've posted charts on Twitter. Starting to move last week, but still in this consolidation. Bigger picture, where are we in sugar? There's the monthly. Kind of been back and forth for the last 2-3 months here, but it's starting to break out and getting ready to move. So sugar's one that we think you gotta have your eyeballs on, gotta be paying attention if you're not in. And the last one we'll look at is cotton. Here's the cotton daily. We talked about this a few weeks ago. Broke out of this triangle, came back and tested the triangle, sort of textbook, rallied off of it. But again, bigger picture, where are we in cotton? Similar pattern. big triangle here. The next move is the one you want to catch, which is why you got to have your eyeballs on it if you're not in it, or if you're in it and you want to add, got to watch it. These things are going to move, and they're going to move similar to what coffee's done, similar to what copper's done. It's just how they move. The key thing I think here is all the commodities that I follow are saying these consolidations and corrections and sort of chop that we've seen for 9 to 12 months in the various markets is coming to an end soon. Maybe some markets it's going to be this week, some markets going to be next week, some markets it's going to be in early August. Whatever the case may be, if you're interested in these markets and you're interested in trading them, now's the time to keep your eyes open and look at them, because something is happening. Barry, what would you add to the whole commodity story?
Well, I think you made the story pretty clear. They're all starting to break out in longer time frames. So, it doesn't look like a transitory move.
No.
Really a long-term cycle kicking in. So I think, my take is, if it's trending on a longer time frame, just focus on that and try to trade in that direction and try to make a couple of bucks. And looks like we have a chance to do that, because these things don't trend all the time.
No.
Sometimes they sideways not sometimes, most of the time they're sideways for years. And now the exciting part is we're coming into a time where, all these commodities are starting to move, which is huge. And I'm glad we're on it and able to talk about it. So, yeah.
Absolutely. Well, listen, good luck this week, everybody. As Barry said, we'll be posting levels and for different markets on Twitter all week. May even get one of those educational videos out this week. So subscribe to the channel and you'll get notification whenever we post a new video. Have a great week, and we'll talk soon.
All right. Thanks, Ben.
All right. Take care.
Bye-bye. Have a great week, everybody.